SoFi's earnings announcement was even bigger than I had previously expected. So in today's video, we are going to take a look at this announcement, go over the numbers, and I'm going to give my opinion on what this could mean for SoFi moving forward. And if you enjoy this video, don't forget to drop a like down below and subscribe for more videos like this one. Before we jump into SoFi, I do want to provide an update on the portfolio. Right now, the total value of the portfolio is sitting at $53,520.83. But the big news around the portfolio is around a company that I've added, and that is none other than Google. I purchased 5 shares on Monday with a cost basis for those 5 shares of $842.55. Right now, my market value on this position is $856.45, so I'm up a little bit, around 1.5%. But obviously, I felt good heading into the earnings announcement, and that led me to buy shares of Google. I made a video around a week ago. Feel free, go back and check it out, talking about what my feelings are towards Google and why I think this company is going to be successful into the future, and especially around their valuation. Right now, compared to a lot of other big tech companies, they are sitting at a low valuation, and I felt good about where the company is trading at and where they're headed in the future. Other positions that I hold in this portfolio are Alibaba, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. And obviously in this video, we are going to be talking about SoFi, which right now my position is up around 85%. And over the course of the past week, SoFi didn't really react to their earnings. Even though they came through with great numbers, the stock has basically traded sideways. It's down around 1.25%. It did spike down immediately after earnings. However, it recovered very quickly. We could see it dropped around 11% over the earnings announcement, but over the course of the next day and a half, it recovered back up around 15%. And likely this lack of reaction just has to do with the fact that the stock has ran up so much in the last month alone. It's up almost 42% in the last 30 days. And over the last 6 months, it's ran up almost 60%. So a lot of this positivity has really been built into the stock in the last month and a half, as we've seen it move up so rapidly. And SoFi came through and posted a beat on both their top and bottom line numbers. Their top line revenue came in at $697.1 million, which was an increase of 30% year over year from $537.2 million in the third quarter of 2023. And for their 4th consecutive quarter, they have posted a positive GAAP net income, coming through with $60.7 million, or a diluted earnings per share of 5 cents. But the more important of these two numbers is definitely this 30% growth number. And here's why. The big concern for investors over the last couple of quarters has come around revenue. In Q1 of this year, we saw 26% growth year over year, and revenue actually declined quarter over quarter from $594 million to $581 million. In Q2 of 2024, they only saw 22% growth on their top line. They did see a slight increase, achieving a new all-time high of revenue of $597 million. However, what this quarter represents is SoFi getting back to growth. 30% year over year is the highest they have seen since the 4th quarter of 2023, and they have seen a significant increase in their revenue overall. Again, in Q4 of 2023, they were only putting up $594 million. They have increased their revenue by almost $100 million to $689 million. So overall, this is huge because it proves to investors that SoFi is still a growth company. And the revenue growth is primarily coming from 2 segments: their financial services as well as their tech platform. Combined, these 2 segments grew 64% year over year and now make up 49% of their total revenue. And you can see just how quickly these 2 segments are growing. In Q1 of 2023, these 2 segments were putting up $159 million. Here today, they have over doubled to $341 million. And of that $341 million that these 2 segments brought in, financial services specifically brought in $238 million, up 102% from a year ago when they put up $118 million. And you can see a little bit more how this financial services income actually breaks down, because net interest income came in at $154 million, up 66% year over year. However, non-interest income came in at $84 million, which is up 235% year over year. Right now with interest rates being so high, SoFi can really capitalize on net interest income. And what that ultimately allows them to do, especially for their financial services segment, is increase their profitability, because they have only had to increase their expenses for this specific segment by 20% year over year. What that means is a year ago, their profit margin from this segment was only 3%. However, today it has increased all the way up to 42%. If we continue to see the Fed decrease interest rates, I would expect that SoFi will see a decrease in their net interest income. However, they can offset this by increasing their non-interest income by offering more products to their customers, but this will likely affect their expenses, causing them to go up and the margin on this segment to decrease. But honestly, SoFi is in a great position to capitalize on the lowering of interest rates because they have focused so much in the last few years of growing their member counts. They grew this quarter 35% year over year, adding 756,000 members in this quarter, now sitting at 9.3 million total members. And one of the main ways they'll probably make this transition is by focusing on lending products like home loans. They saw home purchases and refinances grow 23% sequentially, and home equity loans grow 44% from a year prior. In my opinion, SoFi is in a great position heading into this last quarter of the year, as well as heading into 2025. Anthony Noto over the last few years has done an amazing job of positioning the business where it needs to be depending on these macroeconomic conditions. SoFi purchased a bank a couple of years ago, understanding that they could capitalize on a higher interest rate environment. And now they're repositioning to capitalize on a lower interest rate environment. And Anthony Noto has done a wonderful job of really positioning the business to be most effective in these certain environments. And a very important skill for CEOs to have is around guidance and how they can actually put numbers forward that are realistic, as well as that they can actually come through and beat on. Their original guidance for 2024 was revenue growth of only 14 to 16%. Last quarter, they increased that guidance to 17 to 19% growth year over year, and now they're increasing that guidance again to 22 to 23% growth. So for me, I'm really excited about SoFi's earnings that they just posted and where this company is headed in the future. What I specifically want to see is the stock price actually hold up. We've seen numerous times SoFi report their earnings, the stock shoot up either right after earnings or even right before earnings, and then after a little bit, it just kind of sinks back down to this $7 range. I want to see the stock actually hold around this $10 to $11 mark. To me, that'll show a lot more confidence from investors that SoFi is a business that is growing and headed in the right direction. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, where do birds stay when they travel? Check the comments down below for the answer. Thanks for watching.